evening, good morning, good afternoon, wherever you are watching this video from. This is Crypto Autoshi, and I want to make a very extensive and intensive analysis on Bitcoin. This is how to actually trade Bitcoin. Bitcoin is a very volatile cryptocurrency. It's a very volatile cryptocurrency, and just like gold, it is what I term a digital gold. It's a digital gold. So this is how to trade Bitcoin. As you know, Bitcoin is the eighth most uh, valuable asset in the world. We have the seven assets we have before it. We have gold as number one, the most valuable asset in the world. Then we have companies like Amazon. We have companies like I think Tesla is there before Bitcoin. I cannot remember. Uh, but gold just overthrew silver around that should be around March as the eighth most valuable asset in the world. So as you can see, and added to the fact that it is very volatile, it's actually a very good coin to trade. So if you are a trader or if you want to trade or if you want to be a crypto trader, it's actually very advisable to focus on Bitcoin because Bitcoin is the king of volatility. You understand? Gold is also a very volatile asset. Now, if that is in the forex world or in the metals world, but crypto, in terms of crypto gold, Bitcoin is the most valuable and the most volatile asset in the world when it comes to crypto, not like generally. So this is how to trade Bitcoin. Now there is something I call top-down analysis. There is something that is called top-down analysis. I really hope this thing does not cut while I'm making this recording. Top-down analysis is whereby we go to a higher time frame and then move down to the lower time frame. We go on the higher time frame and take our trades, uh, look at the direction of the market and see what the market is doing at that point, and from there we take our informed decision on the direction we are going to take our trades on. Even if you want to take a counter trend trade, you know that okay, this is actually a counter trend. Just like for that knowledge, especially as you can see, this is a an uptrend. It's an uptrend, obviously. This is a clear uptrend. Why? Because we are forming higher highs and higher lows on the weekly time frame. Now, at some point, we made a very extensive uh, consolidation. We had a very crazy consolidation of months. It lasted for months. Now, when you drop down to the daily time frame, remember we are doing top-down analysis. When you drop down to the daily time frame, what are you seeing? You are seeing a you are seeing an uptrend, a consolidation, and sell, buy, sell. It's a consolidation, buy, sell, buy, sell, buy. This is what has been happening now. We had a break of structure here that broke this previous high. We have a buy, we have a small sell. This is where we now finally broke the main structure. Now we had a buy, we had a pullback, we had a buy, and now we are having what? A pullback. So what next are we going to have? Most probably is another buy that will take us up to the upper zone. So when you come to this consolidation, this is daily time frame, right? When you come to this consolidation, what are you focusing on? You're focusing on what is happening at this very point. There is something I also want to teach you. But let's do this first. You focus on what is happening at this very point. Let's say the market was here. Let's say the market was in this zone. Let's use this. Let's say the market was in this zone, in this whole zone. Let's say the market was in this whole zone, for example. What are you going to do? You're going to carry your counter trend line. Let's say the market was here now. Market is trading here. As you can see, once you see the market trading here, what will you do? You look left. And if you look left, if you carry your rectangle and move it to this left, as you can see, you move this rectangle to the left and it's formed, or it's coincided with this support here. It coincided with this support here. It coincided with this support here, as you can see. So the most logical thing to do here is what? To sell. Now I will teach you guys my epic entry strategy. There, I have different entry strategies for entries when market comes to a zone of interest. So when it comes to this point, we have seen that this is a main support. Where is the main resistance here? Here is the main resistance. The major resistance here, as you can see. Here is the main resistance and what? Here is the main support. So what will you do after this? You go down to the lower time frame, because definitely you are not going to enter this market on a daily time frame, although some people do, but me, I don't enter the I don't enter the market in a daily time frame. I enter the market on a 4 hourly or 1 hourly time frame. That's where I enter. But when it comes to general projection, I use the daily time frame. So when it comes to entry, what do I do? I have seen so many times that most times we have something that is called counter trend line. This is what I call counter trend line. Although I have different filters for it. I have different filters for it. See, this video I'm making is also what I will watch when I get confused at some point. I go back to watch my own videos, yes. So this is called a counter trend line. Some people even go to lower time frames to refine this entry. For example, if you go down to the lower time frame, you will see that there is something that has also formed here, something like this. Some people are more aggressive. Some people will enter this market here instead of above here. For example, you take this long position to, as long as it has broken above this zone, put your long position here. Move your stop loss below this low. You understand? So that you can give the market the chance to go mad anyhow it wants. Then when you do this, you go back to the daily time frame. This is what I do to catch several pips in the market. You go back to the daily time frame, click on what you just placed, and then take it up. Imagine 4 hour, 5 hour, and then take it up. This is your main target. This is 6.9, almost 7 hour. Now you hold this trade. Why holding this trade? This is not the only trade you are going to take. Now wait. If you go down to the 4 hour time frame, if you go down to the 4 hour time frame, you will see pullbacks that are happening. You will see this is one of the major pullbacks. This is your major target, but this is one of the major pullbacks that happened. One. This is one of the major pullbacks that happened. Imagine taking this trade. This trade occurred in, I think, September, 8th September. You took this trade on 8th September. This is your major target, right? Now, you bring up your long position tool again. Take another trade here. Why? Because of this pullback. Because it's not just one trade you will take. You will take another trade here going to the same direction. You understand? Going to the same direction. When this thing went, as this thing is going to the same direction, there is another trade that also formed here. Doing what? Going to the same direction. You take another trade here. This is another trade that formed here. Imagine you are holding the first one, you are holding the second one, the third one has also